Welcome to the Social Security Nerds podcast. I'm Mike Hayflick with my partner, Russ Geiser. Together, we've embraced the complexity of Social Security claiming strategies and retirement income planning so you don't have to. Russ, today, content of the day. Will your Social Security income be taxed or be taxable?
I don't know.
I don't know either. We get this very, very often. We hear many thoughts and opinions on this one. And we know that the answer can be yes or no. Let's go deeper on this one, Russ.
Yeah, we talk to so many people and we get this question. I heard my Social Security benefits can't be taxed or won't be taxed. And the answer is it lies somewhere in between. It will be and it won't be. Basically, what happens is there are situations where you will pay no tax on your Social Security income, but that largely depends on how much other taxable income that you have while you're claiming your Social Security benefit. Up to 85% of the household Social Security income can be taxable as ordinary income, by the way. That's how it's taxed. And so we're going to talk about the IRS's provisional income formula a little bit, how that works. And so you can kind of get an understanding of if you think yours will or might not be taxable or some of it will be. And I think, again, it's important to note that we're talking federal taxes here.
That's right.
Depending on the state you live, I think there's 4 states right now that tax Social Security benefits. Most states don't, but you'll want to check with the state that you live in to figure that out. And we'll run through a couple cases here, too, to give you an understanding of how this works.
Yep. And to be clear, we're not CPAs. We don't do tax preparation.
No.
However, we often talk to CPAs. We often talk to people who do tax prep, including the people themselves, right? Your own household. You may do your own taxes. We can help you. We have really good analyzers, software that can help you determine if you can be a zero tax, meaning pay no federal tax, including that of Social Security income and any other income, or to what degree will you be taxed because of your Social Security and other income. So we can definitely guide you. This is a key part of the things that we do as retirement income planners. So Russ, let's go into the idea of provisional income, because that really is the core of how to determine how much of someone's Social Security income is taxable.
That's right. So the IRS has a thing called the provisional income formula. And what that is, it's 100% of your modified adjusted gross income, which is all income other than really Roth IRA distribution. So even tax-exempt bonds count here. So 100% of all income sources plus half, 50% of the household Social Security benefit if you're married filing joint. If you're single, then it's half of just your only Social Security income. And those two numbers together give you the provisional income. Now, it doesn't end there. Okay, that's just the beginning. You figure out the provisional income. And then there's thresholds that the IRS shows that you have to compare this against. Okay. So depending on how much provisional income you have, and if you're a single or joint filer, up 0 and all the way up to 85% of the Social Security benefit can be taxable.
Right. And I always envision a 1040 as I think of these things. So on your 1040, page 1, keeping this simple, line 1 is W-2 type earnings, right? It's money earned when you work for an employer. That's a type of income. What other types of income are there? There's dividends, there's interest income, IRA distributions. Now, Russ mentioned Roth IRAs not counting. They don't count because the money that went into a Roth IRA had already been taxed. So upon use or upon distribution, that money is not taxed again. So it's a really favorable type of money to have. We always like when people have accumulated a big pool of Roth IRA money, because then upon use, it's not taxed.
Not super common, though. Most people have this traditional IRA money.
Absolutely. Absolutely. And what's nice, though, is when you talk about provisional income and how much of your Social Security income will be taxed, having Roth IRA monies it can be very, very favorable. What other things? Well, depending on other types of income, if you're self-employed, you might have other type of income because of that. Net expenses, right? That would count. So again, envision your 1040 and then imagine your Social Security gross kind of being in the middle of that 1040. The question is, what slides over to the right to then be taxed right, as part of your adjusted gross income.
Right. So if you have, if you're a joint, I will go through joint examples.
Yeah,
I
a
think,
joint. Yeah, that seems to be
for the married
more
couples
common.
out
Sure.
there, if you're a joint filer, married filing joint, and your provisional income is under $32,000, this is for 2024, zero of your Social Security income will be taxable.
Mhm.
Okay. If you are filing joint between 32,000 and 44,000 of provisional income, up to 50% of that income is considered taxable. And if you have more than $44,000 in income,
Mhm.
up to 85% of that income is taxable. However, there are 3 different tests the IRS will use, and we won't get into the tests, but they use the test that ends up in the least amount, the lower amount
Mhm.
due. And so we'll walk through a case and explain kind of what this actually looks like.
Yeah, and I think I could do this. Let's go through maybe best case scenario. And best case
Yeah.
scenario means you might have a lower income, but best case scenario for this podcast is you won't pay any taxes, right? That's a good thing. So the federal government would receive nothing from you if this was the case. Here's an example. Married couple, they have $54,000 of Social Security income between the two of them. To still be a tax of zero, they could have other income of over $22,000. So you might say, how on earth can that be? Well, it happens like this. Half of the Social Security income is counted for the provisional income formula. And then all of the other income is counted to develop that provisional income number. When you go through the 2 thresholds, you reach a number of 32,300 of adjusted gross income. But as we know, the federal government allows for a standard deduction. So if you're not doing itemized deducting, a married couple over 65, both people over 65, get a $32,300 standard deduction, meaning all of the AGI, adjusted gross income, was negated by the standard deduction. Bottom line of your 1040, taxable income, zero. That's a case where 76 plus $1,000 of income gross is also net. And if your state doesn't tax Social Security income, you are not paying a single income tax dollar in that year.
Right. And this can be a big, I guess, trickle down benefit of making the right Social Security claiming decision for your household. Because here we're talking about perhaps a benefit that was left to grow, and then pulling less from IRAs in this scenario later on. That's not always the case, but we typically find, or oftentimes we'll find that to be the case, which is pretty cool. Now, you're probably not used to seeing every dollar into your bank account that you actually make. Definitely not when you go to work every day.
It can definitely blow people's minds when you say, all right, how much were you making when you worked? How much was taxed? You had federal and state and FICA Medicare taxes. You had all these other deductions. How much did you actually have when you went through all of those taxes and even deductions? And to see that you could almost be, or in many cases be tax free, it can blow people's minds.
For sure. So here's just some information about how this would work. He talked about, what the income from Social Security is, and then the other income distributed to have zero tax. Here's an example of a family recently that we talked with. They have Social Security income for the household of $76,733 between the two. $15,551 from the IRA to get them to their income goal that they needed. Okay. So how much of the Social Security is taxable here? Well, we need to know what the provisional income is. So with the provisional income formula, we know that 50% of the Social Security income is $38,367. We add that to all of their IRA distribution income of $15,551. Leaving them with a provisional income of about $54,053,918. In this case, the IRS would apply a test, and basically 50% of the amount over the first threshold of $32,000, which is about $11,000 that would be taxable. And then B would be their provisional income over the second threshold of $44,000, 35% of that would be taxable. And when we net those two together, the 10,959 plus the 3,471, we get $14,430 of the $76,733 Social Security benefit is considered taxable.
Now, all of the IRA distribution is taxable in this case. But when you combine those two numbers, you have just about $30,000 of adjusted gross income. Again, all of it. If these two people are older than 65 years old, filing married joint, all of that AGI gets negated by a standard deduction. Now, this is accomplished in what we'd call an after Social Security optimization case. Russ, what do people do to live when they haven't taken Social Security yet? I think a lot of people say, come on, $77,000 of Social Security income. That means they had pretty robust earnings records and pretty hefty monthly income benefits. But what do we do? Like, give an example of how that might be accomplished.
Right. So I think this problem comes in, and many of our clients will come in and say, we've saved a nest egg in our 401k plans because pensions have largely gone away. And we have worked both of our whole lives, and we've had good earnings. We don't really know when we should be claiming Social Security. Back to other podcasts, most people will talk about the break even. Mm-hmm. So in this scenario, we likely got here by coming up with a strategy where we deferred taking Social Security and we started drawing down IRA wealth prior to turning on Social Security to get to this more optimized strategy. And what we've essentially done is we've shifted the risk of the income that they wanted to Social Security. We beefed up their survivor benefits, and we took more risk out, or less risk in the markets, to help them fill the income gap of that 15,551 now that we're talking about from the IRA. And then, like I told you, as a trickle-down benefit, we've achieved crazy tax optimization. I mean, we're talking zero income taxes on over $90,000 worth of income.
Yeah, and in this case, like, our plan is to fortify someone's retirement income, meaning, like, let's solidify so that 20, 25, 30 years can be basically secure, meaning no wonder about the markets, no worries about higher, lower interest rates, no worries about rampant inflation. We try to get with 95 to 99% certainty that you will be okay no matter what other conditions you're facing. I often say, Russ, we become risk managers, right?
That's right.
CPAs, those of you who wear your own tax hat during tax time, there's immediate satisfaction in trying to accomplish kind of a very a good sort of tax situation. Maybe it's getting a refund, maybe it's lowering your tax. Sometimes, though, you have to look a little bit more outward, not just on the current year or even 2 or 3 years out. We try to look 5, 10, and even 20 and 30 years out to try to create not only a reliable income plan, but maybe even a highly tax efficient plan as well.
And we do this all day. We help people all the time with this. We challenge you to take part in what we call our retirement income stress test. Call or text us at the number below on the screen. Reach out to us on our website, schedule a consultation with us. No obligations. We're happy to walk you through this, help you understand if you're doing the right things with your money, and to make sure that you have a plan that is going to work for you in the best possible way based on your goals and objectives, how much money you want to spend in retirement, your legacy, your tax efficiency, your investment management, making sure that you're going to succeed through retirement.
And with that, please subscribe to our YouTube channel where you'll find all of our video content, and visit us and contact
us. The Social Security Nerds.
At Social Security Nerds. And go ahead and find us through our website, incomeplanhq.com. Thanks for joining us, and we hope you return next week.
Thanks, everybody. Have a great week.